So like what then, if we break down the Africa basket, which countries or funds specifically, and when you talk about the fact that long-term Africa could be a good place to be putting a portion of your money, what would you reckon would be the correct allocation of money in this environment?
Well, there's a few ways of doing it. From the point of view, we have to remember to start with, you can get broad-based allocation also from the developed markets. So, for example, one of the many reasons the Chinese stock market hasn't done well, despite on paper the economic data looking good from China, is that many of the US big companies actually sell into China. So if you look out of your window in China, you'll probably see a Starbucks and maybe an Apple store and so on. And that's the same all around the world. So the first play could be you could just invest into companies or sectors in the developed world that are actually doing better in the African market. That is one way of doing it. And of course, as Africa probably improves as a continent, you will also see more African firms doing IPOs on the US stock market in the same way that Alibaba and many Chinese companies did the same. But if you want direct equity exposure, a lot of the markets are still in the early stages, and most of the people in those markets actually want to invest internationally, which often makes sense. But possibly the South Africas, the Mauritiuses, any place where potentially they're like hubs for the African region, I think they're more likely also to see companies from East Africa and West Africa actually get on the market, because very long term, the Nigerias of this world, maybe Ghana as well, some of the East African markets, Kenya, Uganda could also do very well.